Hello there, this is Nick Foulks from Drake & Associates with an educational economic update for December 2016. In this month's video, we'll discuss some of the major headlines that influenced markets in November and provide some insight into what these developments could mean for you as an investor. Please stay tuned at the end for a required disclosure statement. Looking back on November, no one could argue that it was a boring month. After a long, exhausting presidential campaign, Election Day brought results that few people were expecting. Just that day, the New York Times had given Hillary Clinton an 85% likelihood of winning, based on the numbers from both state and national polls. We all know how the story actually played out, and what might be even more surprising than Donald Trump's victory is how the markets have responded. Rather than experiencing the sell-off that many experts predicted, the major indexes have shown tremendous growth in the election season. In fact, the Dow added over 1,000 points in November and went above 19,000 points for the first time ever. The S&P 500 and the Nasdaq also reached record highs last month, and these noteworthy market increases are just a few of the positive economic indicators we saw in November. In my last monthly video, I talked about how the gross domestic product, the GDP, had its biggest gain in 2 years, showing that the economy is growing more quickly than most economists expected. Well, when the government released its revised GDP numbers in November, they revealed that the economy grew even faster than previously thought. After years of sluggish growth, we're happy to see the economy is picking up the pace once again. The employment picture is showing equally positive outlooks as well. And unemployment remains low, and personal incomes gained another 0.6% in October. If you look at this year's gains as an annual rate, incomes are up 5%. These meaningful increases mean that the American public have more money in their pockets and will likely increase their spending to match. Consumer spending is already up 4.2% over the last year, and we anticipate it will continue to grow, thanks to greater personal incomes and low unemployment. Since consumer spending accounts for more than 2/3 of the GDP, the combination of a stronger employment, wages, and spending could advance the economy even faster. We expect that the rising income and consumer spending will result in solid holiday shopping season, which will further help the GDP growth. One place where Americans may feel the budget tightening is when they go to the gas station. On November 30th, OPEC, the cartel of 8 oil-producing countries, agreed to at least somewhat limit their supply to the market, in hopes of driving crude prices above their current low levels. As a result, you may experience higher gas prices in the coming months, but we don't anticipate crude will climb anywhere near the record highs of 2008, which were nearly 3 times more expensive than what the market is currently paying. These days, the US and other countries outside of OPEC produce more oil than in the past, which helps to keep the prices lower than during the Great Recession. As we look across the data for November and 2016 as a whole, we believe the economy is continuing to strengthen. All signs currently point to the Federal Reserve raising interest rates when it meets in December. Fortunately, the markets and the economy seem poised to withstand moving back toward more historically normal rates. Between Brexit, the US presidential election, and more, this year has reminded us again and again that no one can predict the future. But I'm happy to say that recent economic reports and market performance give us many reasons to be thankful and to look toward the future with anticipation. That's it for this month's Educational Economic Update. We have some upcoming Social Security and retirement classes in the Milwaukee area. Visit wealthwisconsin.com to learn more, and be sure to listen to our Retirement Ready show on AM 620 WTMJ Saturdays at 1 p.m. Once again, this is Nick Foulks from Drake & Associates signing off for the month of December 2016. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 414-409-7226. We'd be happy to talk with you. While we believe that the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for purchase or sale of any security. please consult your financial professional before making any investment decisions. Investment advisory services are provided by Drake & Associates, LLC, a state of Wisconsin registered investment advisory firm. Insurance products are offered through a separate company, Loft Financial Advisory Group, LLC, a Wisconsin insurance agency. Clients are under no obligation to purchase any recommended insurance products.